Let's talk about those financial products you might have bought years ago. Ever get that nagging feeling that they might not be the best fit for you anymore? Well, we're about to dive into a powerful, but honestly, often misunderstood tool that can help you with that. It's called the 1035 Exchange, and you can think of it as a strategic upgrade for your financial toolkit.
I mean, really think about it. Is that old annuity or a life insurance policy, the one that seemed like a great idea a decade ago, still the right choice for you today? It's kind of like holding on to an old flip phone. Sure, it still makes calls, but the newer smartphones have way better features, better performance, and just offer more value. What was once cutting edge can pretty quickly become outdated, start underperforming, or just get too expensive.
So here's our game plan. First, we're going to talk about the why. Why even think about making a change? Then we'll get into the nuts and bolts of what a 1035 exchange actually is. We'll cover the rules you absolutely have to know, walk through how the process works, step by step, and finally, we'll weigh all your options, the good, the bad, and some pretty clever alternatives.
First up, why even bother with all this? It can definitely feel like a hassle to switch up a financial product that's just sitting there. But, the reasons to upgrade can be really compelling and could make a huge difference to your long-term financial picture.
Let's get into the specifics. Maybe your current annuity just isn't keeping up with the market, or maybe you've realized that sneaky fees are eating away at your returns. It could be that your life has changed. Maybe you're saving for a kid's college now, not just your retirement. Or hey, you might just be looking for a more modern product that has better investment choices or more flexible rules. Any one of these is a perfectly good reason to start looking at an upgrade.
Okay, so you're thinking about a change, but how in the world do you make that switch without getting hit with a massive tax bill on all the growth your policy has earned over the years? Well, that is the exact problem that Section 1035 of the tax code was designed to solve. To put it simply, a 1035 exchange lets you move the value from one policy directly into another one. And, this is the key part, without having to pay income tax on the gains right now. Your money gets to keep its tax-deferred status, but it gets to live in a new, hopefully better, home. You're basically just porting over your tax benefits to the new product. But, and this is a big but, the IRS has 3 golden rules you have to follow. First, it has to be a direct transfer. The money has to go straight from the old company to the new one. It can never, ever touch your personal bank account. Second, the policy owner has to be the exact same person. You can't use this as a tricky way to gift a policy to your kid tax-free. And third, this is only for non-qualified funds, which is just a fancy way of saying money that's not already in a tax-sheltered account like an IRA or a 401k. All right, now this is where you really need to lean in and pay attention. The IRS is super specific about which types of policies can be exchanged for others. Think of it like a roadmap with very clearly marked approved routes, and taking a wrong turn can be a really costly taxable mistake. So the rules create these really clear pathways. You can swap like for like, life insurance for another life insurance policy, or an annuity for another annuity. That's easy. You can also move from a life insurance policy into an annuity. But here is the one critical restriction you have to remember. You can never exchange an annuity for a life insurance policy. That is a huge no-no. It's a common mistake, and it will absolutely trigger a tax bin.
Okay, so we've covered the what and the why. Now let's get to the how. We're going to walk through the actual process. And the good news? It's usually a lot simpler than you think, because the new company you're moving to is going to do most of the heavy lifting for you.
The whole thing really boils down to 5 main phases. It starts with you figuring out your goal. What are you trying to accomplish here? Then you find the new product and you apply. The most important step for you is signing that 1035 exchange paperwork with your new company. Once you do that, they pretty much take the wheel. They'll contact your old provider, they'll arrange for that direct transfer of money, and then they'll issue your brand new upgraded contract. Now, a quick reality check on the timing. This is not like an instant Venmo transfer, okay? You're coordinating between 2, usually very large financial institutions. So just be prepared for the whole process to take anywhere from 2 to maybe 6 weeks. A little bit of patience is definitely required here. Finally, and this is probably the most important part of our whole chat, let's weigh the pros against the cons. A 1035 exchange is an amazing tool for sure, but it is not a one-size-fits-all solution. You've really got to look at the whole picture to decide if it's the right move for you. The benefits are pretty awesome. The headline feature, of course, is that tax-free transfer of all your gains. But beyond that, this is your chance to upgrade your financial hardware, right? You can move to a modern product that might give you better growth potential, lower fees, or just more flexible access to your cash. It's all about making your assets work smarter. But
and you knew there was a but coming, you have to look at the other side of the coin. Your old contract might hit you with something called surrender charges. Just think of them as an early termination fee. And crucially, the clock on those charges resets with the new product. It's just like signing a new cell phone contract. You're starting a whole new commitment period. And of course, you have to factor in the costs of any new bells and whistles you add to the new policy.
So how do you get around those costs? Well, here's a pro tip. You don't always have to move all your money at once. If those surrender fees are really high, you could try a staged approach. Do a partial exchange now with whatever amount is penalty-free, and then you can just transfer the rest in a year or two after those fees have gone away.
And that whole idea of a partial exchange opens up the door to a bunch of other smart alternatives. A full exchange isn't your only play here. You could do what's called a split exchange. Divide the money between two different products to meet a couple of different goals. Or, you know what? In some cases, the best move might be to just leave your old policy alone and simply add a new one to diversify your holdings.
So there you have it. The 1035 exchange is a powerful, very specialized tool for keeping your financial plan in peak condition. This isn't about chasing the shiny new thing. It's about making sure the money you've worked hard to save is positioned to do the absolute best job it can for your future. And that really leaves us with the final question, the one only you can answer. Is it time to pop the hood on your own financial plan and see if it's truly tuned up for the road ahead?